Alright, good. Welcome to tonight's chart focus. It's a bit late on a Sunday night. Sorry, but I have a fairly big weekend, so I haven't had a lot of time to get a video done. Right, what I want to have a quick look at again is the XJO almost touched that 4700 again on Friday. Couldn't hold on, but it still looks definitely like the key. US finished down a little. Interestingly, Nasdaq was quite strong. The S&P 500 was up a little as well, so we'll probably be flat tomorrow early, but if we can get our heads above that, you never know, we might get a little bit of momentum up. Well, what I wanted to show tonight, rather than going through a mishmash of interesting charts because there's so many, I thought I'd just touch on something different. I'm going to talk about trading tight range breakouts and position sizing on a tight range breakout. So the first one I'm going to have a look at is ELD. Okay, so you can see there's the daily chart. Been in a pretty tight range here for the last week or so, and so I'd suggest if it breaks this range one way or the other, obviously there'll hopefully be a bit of a momentum to the break, and we'll get a decent run. So what I'd look at doing is let's say we'll look at these to the long side. We'll be positive and hope they can break to the long side. So 61.5 recent res. This is quite a tight one, so we could look at our stop at a break out the bottom. So at the moment it's 57, so we might want to give it to 56 just in case there's a false break. You could give it a little longer. So basically what I would suggest you do is get something like this little position size calculator. It's not something I use now. I just pretty much make my position sizes on the fly. But if you're new to trading or you're not exactly sure how many you should take, this is a good little calculator. If you just search for position size calculator on the internet, you should find this one on one of the first few searches. But we'll use this as an example. I'll just go back to this. Our entry was 61, I think. So we'll put 61 as our price. Our stop was at 56, I think we said. Okay, now risk. You can do the 2% deal, whatever you're comfortable with as far as risk per trade. In the early days, for me, I always preferred just a monetary figure, but I think psychologically wise, if you keep your losses at a value that is easy for you to take, it makes it much easier for you to take that loss. So if you're comfortable taking a $200 loss or a $500 loss or a $1,000 loss, depending on what your equity size is, I prefer to go that way rather than a percentage. Obviously, you don't want that percentage to be 10% of your stack or something like that. You don't want to be risking that on one trade, but 2% seems to be the standard figure going around. Personally, I prefer just a risk value. So let's pluck a figure out of the air and say I'm willing to risk $500 on this trade. Got our price at 61 for entry, stop at 56, calculate. And this tells us that units to purchase 10,000 will risk us $500. It's a $6,100 parcel size. Price at 61, stop at 56, risking our $500, we buy 10,000 shares. So it's a really good little calculator to work out your position size. Then all you need to do is set your alert at the top. If you're looking for a possible short on the downside break, you'd actually just reverse the entire thing, set your alert at the bottom there, go short with the break at the top if it bounces. And you can also, if you want to do percent risk, let's say you have 50,000 in your account and you want to risk 2%, which, like I said, seems to be the standard. 2% is $1,000, so you're buying 20,000 shares. Now, of course, sometimes you're going to get slippage, and you're going to end up losing more than that. But these calculators are a good way to keep your losses sort of quite manageable in the beginning when you first start trading. So let's have a look at a couple of other trades that sort of have been in a fairly tight range recently. QBE, not quite as tight as ELD there, but certainly sideways for the last week or two. So again, we could look at a break of 1748, so let's say 1750. Lows have been 1696. I've got 1750, 1696. That's a fairly, there's 50 or 60 cents. So for me, that's a fairly big drop for this breakout. For me, that's a failed break well and truly before it breaks out the bottom of here. So I'd look at possibly going to a break of maybe 50% of the range, so it dips down into the lower half of this range and you're out. Or you might want to pick, let's say for example, the low of today, of Friday, sorry, which is 17.15. You might want to pick say 17.14 and you're out. And we'll use that one for this example. So we're talking about say a 17.50 entry and a 17.14 exit. I probably wouldn't personally give it that much room, but I trade pretty tightly. So let's whack this one in. We're looking at $17.50 entrance, $17.14 exit, and again, let's say we're willing to risk 500. Calculate tells you to buy 1,389 shares. So yeah, it's a really handy little calculator. I might put the link to the download up on the Twitter a little later if I can, but I'm sure you'll find it if you just go position size calculator on Google. That one will come up. So we can look at another couple of charts that you could do the same. IOH was one. Well, what have I done here? Okay, IOH. Again, recently fairly tight range. Now, has been some resistance above 60 here at 63.5 and up here at 65.5, but the last week or so 60's been really strong res. Support at 50, a little lower I think, 48. So again, you've got a 12-cent range there. You could keep your stop at a break of the 50% dip, so 12 cent is 6 cents, $1.54. You can make it $1.53 if you wanted to keep things fairly tight. As I said, if it breaks this range and falls back to further than 50% of that range, for me it's definitely a failed break. But we'll do one more. So we're looking at say a 161. We'll put 160.5 entry and a 154 exit. So let's go percent risk this time. So we're talking about a 160.5 and a 154, and you want to risk 2% of your portfolio, and you've got $100,000 in your portfolio. Calculate 30,000 position, you're risking $2,000. So it really depends on what you're comfortable with. I personally think 2% of your portfolio is a little bit much, especially if you're day trading or short-term trading and want to be in quite a few positions at once. I'd probably be more comfortable bringing that down to 1% or something like that, or like I said, a fixed amount. That way it makes it way easier to keep yourself disciplined. If you know no trade's going to cost you more than a figure that you know you're comfortable losing, it makes it much easier to stay disciplined. If you do the 2% rule and it's a $3,000 loss and you really don't like the idea of losing $3,000 on a trade, then you shouldn't be setting your position size that high. I strongly recommend keeping the positions to a size where that loss is not too hard to take when it comes to actually pulling the trigger. Okay, so yeah, that's a little position size calculator. A couple other little tight ones. There's CER that I saw come up on a scan. Again, you just set your alerts at the top and bottom there. And as I said, if these are shortable with your CFD provider, then you can set the alert on the top and the bottom and short the break and reverse the system. 10, another quite tight range. So I'll run scans over the entire market every night, looking for some of these tight ranges and set alerts accordingly. And so that's when I do Twitter stocks that are on tight range resistance or support. It's usually because I've had an alert set overnight. And to look for them, you could just run a scan basically looking for something like the lowest average true range in 20 days or something like that, and that's where I found quite a few of these when I did the scan tonight, just to do this video. So that it'll pop up a list of stocks where the average range has been reducing, and then you just set your targets if you like the chart. Once you are in, you could throw some Fibonacci's on it to get some ideas of targets, or like for this one, let's run some fibs from maybe the previous highs down to that low. Oh, come on. Let's try again. So around there. Now, really interesting here, look, we've run it from the top here to the bottom. 38 was exactly the bounce last time. Excuse me, I've set myself a timer this time so I don't go over 10 minutes with these videos. I've got a minute to go, so I'll keep it brief. But you might look at the 50 for your first target, which is up around the 152.5. The next one's 157.5, which looks like a really valid place for some resistance, because we've had previous support around there. I'll get this out of the way for a moment. Previous support around there, and a couple of gaps here. So that could be a really valid target to look for. I don't actually have a set target where as soon as it reaches that point I sell. If it gets there and looks like it continue on, I may well just set a trailing stop from there, or sell part and let the rest have a trailing stop. But I use it as a guide. I certainly don't use it as a set target. So that's it for tonight. Just a quick look at one of many short-term trading strategies, and good luck tomorrow. Thanks.